Welcome to the end of day review for Thursday, the 14th of December 2023. Looking at the economic calendar, as you can see, there is a whole bunch of red folder news happening in and around at the New York session. In terms of the British pound interest rate news, this is quite significant, and you don't want to have any open trade positions at the time of this news release. Given this fact, it's highly unlikely or probable that you won't find an entry during the London session, at least not until this news release. In terms of the new USD news releases, so the interest rate remained flat, which as a result shouldn't cause much of an impact on price and doesn't really give us a bias in terms of which direction to trade based on the news release. However, in terms of USD based news releases, as you can see, they've all been positive, and thus the USD is expected to strengthen, and thus shorts are the favorable direction to trade if you're opening any new trades during the New York session. Jumping into the charts, there's a number of aspects to cover, the first being the fact that yesterday was essentially day 4 of a bullish consecutive daily candles, and thus expecting another bullish candle was quite unlikely and not high probability, as this tends to happen only once or twice in a month. Given this fact, the bias in terms of the daily would be to short for the day. However, we sit with a situation in which we can only long from a technical analysis bias. This is because the pullback phase was essentially invalidated yesterday on Thursday, or actually this morning. On Wednesday it was invalidated, which meant for today everything to the left is considered CPPs, and thus we can only long in terms of technical analysis. Therefore, for trading the London session in particular, there wasn't any scope to enable us to actually trade longs because of the daily bias being against this 4H narrative from a technical analysis basis. Then moving on to the New York session, what you can essentially see is upon this 4H candle closure, which happens at around 8 p.m. my time, so this is 2 hours after the trading session, which essentially means I probably wouldn't have considered any trades. We do in fact validate the ERL continuation momentum scenario, and given the fact that the daily is supportive of shorts, given the daily candle consecutive bias, we can actually short from this level once we do have the validation from the 4H candle closure, which means we're essentially considering a New York high of the day 5-minute entry. However, the issue with this is it's quite low in the day, and the reason why I would consider trading 5-minute high of the day in New York would be because we do in fact have USD based news to support trading shorts. So if we quickly jump onto the 15-minute, what I just want to touch on before we move on to the 5-minute is the fact that even if you could trade longs, it's highly unlikely that you would have got any entries prior to the actual interest rate news release from the Bank of England, which does sort of mean you didn't really miss any moves because of that fact. So then bringing me on to the next point in terms of considering shorting in terms of the New York high or low of the day, what we can essentially see is we would have had to wait for 8 p.m. which would be here. At that point we would have created a New York high of the day, and like I said, in terms of the 5-minute, we're happy to consider looking for those short entries purely on the basis that we actually have New York based news to support why this should be the high of the day. In addition, we validated on the 4-hour that we can indeed trade shorts based on a 4H narrative, which would then essentially mean we'd be looking for an entry around this level there isn't really liquidity in the leg other than that being the level, so you could maybe consider shorting from this fib level instead of this. However, it's a matter of actually getting into a trade. The other factor negating actually taking an entry is the fact that it's really late in the day at this point and really doesn't make sense to consider shorts, and makes much more sense to wait for the next day and then you can trade shorts. As we do actually have another bullish day closure, so Friday would be the fifth consecutive bullish day, which is again unlikely, but because we are in ERL continuation momentum scenario, we can both long and short. That essentially concludes my end of day review. There isn't really, or there wasn't really, any trades to be taken during the day. We did actually continue to validate the bullish market structure for GBPUSD. But yeah, in terms of actually getting an entry, there wasn't really one. Your best bet for actually getting into a trade was yesterday, prior to the Fed interest rate news. However, that's again quite risky and probably not actually worth it. The only positive thing to that would be we would be positioned on a Wednesday, meaning that Wednesday could be the low of the week and we could hold this trade all the way to the ERL. But like I said, actually finding an entry right here is extremely challenging and probably was not worth the risk.